Hi there, I'm Dean Heskin, President and CEO of Swiss American Trading Corporation, and thank you for being tuned into our podcast, The Secret War on Cash, where we take an in-depth look at some of the changing factors or dynamics in our financial markets, the economy, both domestically and abroad. And I do this with my co-host, Chris Agelastos, there he is, popped right in here to help us do that today. Good morning, Chris.
Good morning. How are you?
I'm doing very well, thank you, and hope you had a very good weekend. Excuse me, I'm a little lost in my thoughts. I know it's been a little hot in
Restful.
Phoenix. Restful, that's good. All right, well, let's get right into it here. We are going to take a look at this first article that is talking about, here we go, is true value in crypto or gold? Now, it's interesting, crypto obviously has been all over the news, financial news and what have you, as has gold actually, for gold has for quite a few years now. But as you well know, Chris, and for those of you tuned in, it's interesting when cryptos were, a decade plus ago, really starting to kind of come on the scene and people are trying to understand it better and get involved in it, et cetera. The descriptions that they use for crypto were how they were explaining to people is the same as what you would find for gold. They were
Yeah.
calling it, a store of value, scarce, all the different dynamics. And as we look in this article here, and I'll let you kind of talk about it. I think I know what my personal answer for sure is true value in crypto or gold. But I also think that that you're going to shed some light, Chris, on that. Not to say take anything away from crypto necessarily, or not to beat on the drum of gold, but to explain the difference between the two. And if we're truly talking true value, which has the better true value there?
Yeah. Well, I mean, there's no doubt that, Bitcoin and other cryptos have a lot of value in them currently. There's a lot of speculation in the market and a lot of money going there. There's about $4 trillion is what they estimate is in the global crypto market already. And the reason people are putting money there is because they don't trust fiat currencies, our paper money, not just here in the U.S. but really all over the world. So there's definitely a value there. However, it's very different than gold, as you and I know, because there's really nothing physical behind it. And even though there is this $4 trillion there, it's a very large speculative bubble at the current moment. So it'll be interesting to see, obviously, where that continues to develop. But the nice thing about gold is that it's the original safe haven, if you will. I mean, it has not gone out of style in thousands of years, and there's a large shift currently, through central banks and even individuals, moving some of their dollars and converting over to gold. Banks now are able to hold gold and count 100% of its market value towards their reserves. So if they back themselves with physical gold, they now get to count all of that value as it grows on their balance sheet, and that's a new thing. So there's a lot of things pushing people into gold. Bottom line, and there's really so much room to grow. It's only held by about 1% of the portfolios in the world globally, and only 0.5% here in the United States. So that's why you hear J.P. Morgan, amongst other analysts, saying $4,000 gold is not only possible, it's quite honestly very likely very soon. And prices are going to continue from there. I think to say 4,000, 5,000, $6,000 gold several years ago, people would have said you were nuts. Now sitting here in the mid 3,000 range, and holding strong with all of these other tailwinds pushing it. I think we're going to see some big gains in the coming months here.
Sure. Well, I mean, and we've talked about this before, as the prices get higher, those percentages, the percentages are really kind of what
Right.
matters. Meaning, like, when we were at $2,000 an ounce gold, which was not even, I think, right, roughly 2 years ago,
Yeah.
And for it to go up 20%, that'd be 2,400. Gold, which is certainly somewhat sniffing 4,000 ounce, once it reaches 4,000 an ounce, a 20% move from there would be 4,800, almost 5 grand.
Yeah.
So the
Right.
percentages are really, what will tell the tale. What I found interesting too about, you look at gold is gold. I mean, it's not, there's no leverage associated with it. I mean, people, I guess, could borrow money to buy it, but the value of it in and of itself is just based on what it is. And as they talk about the comparison in the title of this article of crypto versus gold, on into the article, it talks about how Robinhood markets, they're
Hmm.
up almost 500% in the past year. And and I wasn't even actually familiar with this, but what they're involved in is basically, what do they call it? Facilitators of speculation in crypto and stable coins. And they're basically, what do they call them? Special purpose acquisition companies, where they're basically it's almost sounds like a derivative, where they're
Hmm.
creating an investment out of a derivative of crypto. And that's a very common practice in our financial markets, but it speaks to the complexity of that market and asset in of itself. I mean, it's a digital asset. And now when you start like putting these saddling them, if you will, with basically a leveraging factor,
Hmm.
that's where you run into problems in any market, because you have again, you've created a leverage part of it. Well, so
Yeah.
let's get into the next part of, what is actually going on with precious metals. And the bottom line is the how shifting this next article, invest out of Investing Haven, how shifting debt levels are driving gold and silver prices. Well, it's no secret that, yeah, we have debt levels out there for sure. It right in the early onset of this article, it talks about how public debt is nearing 100% of GDP. That's bad.
Yeah.
That's
Yeah.
really bad. And I'll let you get into this, but the
Hmm.
bottom line is, you know, they basically, the conclusion of this article is that for this move towards gold to stop, or for things to shift in some way, shape, or form, the government needs to rein in its fiscal deficits. Well, to that, I would say no duh. And I wouldn't hold your breath on that happening.
Right.
It's been discussed forever. And, you know, the big, beautiful bill and all that stuff. I mean, this has just become the norm anymore. And now it's, if this is what's going to stop gold prices from and silver prices from moving up, then I think the markets are in really good shape as it relates to going up even further.
Yeah, and that's why we're seeing some of these big gains. Gold up 29% year to date. Silver, depending on the day, 25 to 35% up year to date. So there is a lot of movement there, and we talk a lot about debt here in the United States because that's where you and I live. But 80% of the countries out there right now are seeing rising debt to GDP ratios. So that means 80% of the countries out there are starting to spend and create more debt than they actually have income. If you want to kind of try to relate it to the average household, they're in trouble, and they're also having a hard time increasing GDP. So, it's like if you were a household and you're accumulating more and more debt just to get by and pay the bills, and you need to go out and find a way to double your income in order to balance things out. That's obviously not very likely, and that's the same situation that about 80% of the world is in. So it's definitely a,
Right.
a big problem, and as we continue to see that and the tightening of supplies and industrial demand, obviously investors, pushing some of their money, like we talked about in the first article, to kind of protect themselves and hedge themselves. We're going to see continued growth here, and the other thing too they point out, which is interesting. I mean, you know, we know a lot of this stuff, right? But when you really dig into the article and listen to some of the points they made, they were talking about bond yields and
Right.
how people that are sitting in cash and then converting that into bonds are seeing some decent gains because of all this increased government borrowing. But when you account for inflation, the real interest rates that they're earning are negative. So if you make 4%, 5%, 6% even in an investment, but inflation is going up by an amount greater than that, you're really losing value, losing purchasing power. And so, even though you see the numbers climbing on the statement, it's not enough to offset the cost of goods going up. And that's where gold and silver, really as things get worse in the world and these deficits continue to grow and bloat, gold and silver grow to offset that. And that's why we've seen those, 25 to 35 percent gains this year, and there's really no sign of that slowing down.
Right. No, absolutely. And this is why, for those of you tuned in, if you haven't contacted our office to get some free information that will explain a little bit more in depth the gold market, if you want to talk to a representative who can maybe answer some questions, it really is financial. I hate to use the word suicide, but in a way, it really is financially, we'll say, detrimental to one's portfolio to not have some physical gold in there for good diversification reasons and purposes. Not only is it something that is going to give you, that asset that is unencumbered, excuse me. There's no debt tied to it that you can go put your hands on when you need it, but it's proven to be one of the best and top performing asset classes out there. And we don't even have time to get into it in this podcast, but when you start adding all these things that we've discussed here today with BRICS and how these countries are unloading US dollars, which is by both way of our currency as well as our treasuries, et cetera. The only thing that our government can do to counterbalance that is spend more and create more debt.
Yeah.
And so that's where,
Yeah.
if that's the solution, is for the government to rein in its fiscal deficits, that's pretty difficult to do given the circumstances. So if you haven't contacted us, please do so at 1-800-289-2646. You can call or text that number. You'll see it in the show description there, or you can also visit us online at www.swissamerica.com. Thanks for tuning in. And if you're not subscribed, please do so, as we look forward to seeing you more in the future and bringing some more news and information. Thank you, Chris, and have a great rest of your day, everyone.
Thanks. Take care.